Hey, good morning, everybody. Today is Monday, April 6th, 2015. He has risen. My name is Cliff Backus. I am the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Stocks advanced Thursday in a sleepy session heading into the long Easter weekend. For the week, the NASDAQ Composite was down less than 0.1%. While the S&P 500 actually gained nearly 0.3% for the week. Let's start with our Spectrum Analyzer. The Spectrum Analyzer is a product of High Growth Stock Investors, HGSI. You can see them at hgsi.com on the web. They are a wonderful service that I use on a daily basis. You can get a 1 month free trial of HGSI, and you don't even need a credit card. What we're looking at are stocks and groups moving to the upside. We're looking at 101 securities that break down into 46 different industry groups. We sort those industry groups based on the number of stocks from our 101 that are in each industry group. And that brings up the top industry group of oil exploration and production. That's been a theme over the past week or so. We need to begin looking in the oil patch for stocks since we seem to be seeing some strength in that industry group. Next, we have home builders, packaged foods, food and drug, and automobile retailers. Let's take a look at the NASDAQ Composite. I want to do something a little different this morning. What we're looking at is the NASDAQ Composite going back to January of 2014. And what I want to point out is that since January of last year, every time the market has made a significant high and then based, we've broken out of that base, gone on to set new highs, and then undercut that base again. We see that in March of 2014. We see it again in September of 2014. We put in this top. We created this base. We broke out of that base. Then we came back and we undercut it. Then we put in this base in November, December, January, February of this year. We've not undercut that base. Let's drill in a little bit closer on the NASDAQ. Now what we're looking at is a 6-month chart, and this is that base that we were just looking at. We have support in the 48.11 area. I would expect that we see this market come down and undercut this support level. What do I base that on? Let's take a look at the volume over the past month in the NASDAQ. Over the past month, we see that we've had a lot of difficulty on up days getting to average daily volume. In fact, the only time that we really had significant average daily volume on an up day was this triple witching day. At the same time, we've seen a tremendous amount of distribution, which is indicating to me that we have some short-term weakness in the NASDAQ. Therefore, I believe that we have to undercut the 48.11 area before we go on to make significant new highs. Don't get me wrong, I don't think that the bull market is over. What I do think is that we will get an opportunity to buy at lower prices than where we are today. That said, we see that on Thursday, the NASDAQ was up 6.71 points or 1.14%. NASDAQ right now is bracketed by support in the 48.11 area, as we mentioned before, and resistance in the 50.09 range. If the market's true to form over the past year and a half, we should see the market undercut by a little bit anyway, this 48.11 range. Right now, Our 1 to 6 month timing model is showing us a market in transition. This is not a buy signal. The NASDAQ is currently in a confirmed uptrend. We've been in a confirmed uptrend since January 9th. That uptrend is under pressure due to all of this distribution that we referred to earlier. Taking a quick look at our MACD histogram, we see that our histogram is trading below the zero line, and it's also in a little bit of a mini downtrend here. Because we're trading below the zero line, we have one bearish signal. Because we're trading in a mini downtrend, we have another bearish signal, and so our immediate bias on the NASDAQ composite is bearish. Notice that I put in this 50-day moving average on the NASDAQ. A ray of hope for the bulls is that the NASDAQ did hold support at its 50-day moving average. Having said that, let's take a look at the S&P 500. On the S&P 500, we look at that same 50-day moving average, and we see that the S&P has balked at that level. So while the NASDAQ is giving the bulls a little bit of encouragement, the S&P 500 is giving the bulls an equal dose of discouragement. Thursday, the S&P 500 was up 7.27 points, or 0.35%. The S&P is bracketed by support down here in the 2040 area and resistance up here in the 2120 range. Our 1 to 6 month timing model is showing us a market in transition. Trading volume on Thursday was light, as you'd expect on the last day before a 3-day weekend. We are in a confirmed uptrend on the S&P 500, but that uptrend is under pressure due to all of this distribution that we've seen in the past month. Taking a look at our MACD histogram, we see that our MACD histogram is trading below the zero line, but if you notice, we're in a little mini uptrend right here. Thursday's histogram level was slightly higher than Wednesday's level, giving us this little mini uptrend. Therefore, we have one bearish signal, one bullish signal, and so our immediate bias on the S&P 500 is neutral. We have a very confusing market out there. We have a 1 to 6 month timing model that's showing us a market in transition on both the S&P 500 and the NASDAQ composite. We have the NASDAQ finding support at its 50-day moving average, while the S&P 500 finds resistance there. We have both major averages trading solidly between support and resistance. I do expect both major averages to undercut that support level by a little bit before we move higher. All of that said, I don't believe the bull market is over. I believe that we get better buying points than we have right now as the market pulls back and consolidates some of the recent gains. But I don't believe that the bull market will be over until we begin to see some significant interest rate increases out of the Fed. Moving on. Keeping in mind that neither of our 1 to 6 month timing models is on a buy rating, let's take a look at some stocks that we'll be following this week. But before we do, I'd like to note that we lost some big name stocks off of our universal watch list this week, including Apple, NXP Semiconductors, Chipotle Mexican Grill, Gilead Sciences, Celgene, and one of my favorites, Old Dominion Freight Lines. Let's start by taking a look at Blackhawk Network. Blackhawk operates a payment network in the US and 21 other countries that offer gift cards and other prepaid products. We have a checklist rating of 68 on Blackhawk. We have a first stage base. Note that this base has undercut the prior base, making it a first stage base. We have a buy target of $40.57 on Blackhawk. Note that we've added a 50-day moving average to our normal 21-day exponential and 10-day simple moving averages on our charts. Blackhawk on Thursday had a very nice pocket pivot. It's kind of hard to see here, but trading volume on Friday was higher than the trading volume on any down day in the past 10 days. Blackhawk moved off of its 10-day simple moving average, its 21-day exponential moving average, and its 50-day moving average on Thursday, giving us a nice little pocket pivot for those intrepid investors that would like to buy it. Next, let's take a look at Silicon Motion Technologies. Silicon Motion is a Taiwanese developer of microcontrollers, universal serial bus flash drives, card readers, and embedded flash devices. The stock is in a second stage base. We have a checklist rating of 72. We have a buy price or a buy target of $30.50. Note this nice little trend line that's developed in Silicon. We would buy Silicon Motion Technology on a break above that trend line on at least 140% of average daily volume. Next, let's look at Endurance International Group. Endurance provides cloud-based solutions designed to help small business establish, manage, and grow their firms. The stock has had a series of bases over the past year, none of which has qualified to push the stock into a second stage base. So we're still in a first stage base. Note that Endurance gets an 80 checklist rating, which is very high. We have a buy target on Endurance of $20.45. We also last week noted a pocket pivot in Endurance. If you didn't buy it then, you'll get another chance to pick it up if the stock moves through $20.45 on at least 140% of average daily volume. Our next stock, Autohome, is a Chinese provider of independent and interactive content to automotive buyers via Autohome.com and CHE168.com. The stock's in a first stage base. We have a checklist rating of 68 and a buy target of 57.93. But notice this trend line that the stock has established. We would buy Autohome on a break above that trend line if it traded at least 140% of average daily volume. Next, let's take a look at Ligand Pharmaceuticals, which develops pharmaceuticals in the area of oncology, central nervous system, inflammation, and blood disorders. We've talked about Ligand before, specifically when we put in this pocket pivot back in February. Also, we talked about it last week, noting that Ligand is in a year-long cup and handle base with a buy point of 79.61. Ligand gets a checklist rating of 72%. We would buy the stock if it was to break above 79.61 on trading volume of at least 140%. Notice how Ligand has increased volume as it's put in the right side of its base. And then as we put in this handle, volume has dried up. That's exactly what you want to see out of a cup and handle base. Keeping in mind that neither of our 1 to 6 month timing models is on a buy signal, you can buy Ligand at 79.61 on solid trading volume. Our next stock, Cheetah Mobile, is a Chinese internet and mobile software developer of utility and security applications for PC and Android phone users. The stock is setting up a first stage base. The buy point on this base would be way up here, but we have a little trend line that we're putting in. We see that on Thursday we had a great up day on heavy volume. Very brave traders may want to buy Cheetah, which gets a 68 checklist rating, on a push above this trend line on at least 140% of average daily volume. Again, keeping in mind that we are not on a buy signal in the market. Final stock I want to take a look at is Mattress Firm. Mattress Firm, which operates 1,225 centers and franchises 136 Mattress Firm stores in 35 states, and plans to open another 145 to 165 stores in the next year, is an old favorite. We have bought Mattress Firm off of this trend line. We did an add-on buy off of this mini base right here. Right now, Mattress Firm is putting in a cup and handle base. Notice how the volume has picked up as we've moved up the right side of the base and dropped off in the handle. Mattress Firm is in a second stage base. Our buy target is $70.42. It has a checklist rating of 72. I would buy Mattress Firm on a move above that 70.42 area on at least 140% of average daily volume. Keeping in mind, again, that neither our S&P 500 or our NASDAQ composite 1 to 6 month timing models are on buy ratings. This is a dangerous time to be buying in the market over the short term, and so you want to be careful with any of these stocks that we're currently watching. That's about all I have for today. If you want to talk about any of the stocks we mentioned, any of our trading or market strategies, please feel free to give me a call or drop me an email or make an appointment. Come by the office, see what we're up to. If you're out of the area, we can set up a Skype session. A reminder, if you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part, on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.